Good afternoon. Well, back after a short break. We'll try and keep it as crisp as possible. We'll first start on the next slide. Yeah, this is, can we have the next slide? Slide. So I'll just introduce in the meanwhile. On the right side is Mohan, who drives the Mark business, the micro, agri, and rural business. On my left-hand side is Ratish, who drives business banking. Anish heads the gold business, working with Mohan. And Sriraj is our MFI man. So this is what the team is. So we'll put the... Coming there. Okay, I'll start with inclusive finance, which covers micro, agriculture, and gold. Well, Venkat, all that glitters is gold. But apart from that, we also have microfinance and agriculture, and we see a huge amount of scope. I'll be candid over here. 2 years before this, I was only looking at this more like a desktop due diligence and not really knowing what the field was at. I guess many of you guys track microfinance and agriculture also, but I would sincerely urge many of you all, if you haven't, to go to the field to really understand the finer nuances of microfinance and agriculture, and it'll be a revelation. There is the podium behind. We have a full set over there where you can experience it, but a field visit is something which you could arrange at any point in time to get a better understanding of this business, because it did make a difference. The reason why I'm saying that, the customer psyche is different. The infrastructure around him which he operates in is different. It's a very different segment altogether, inclusive finance. And what I would like to highlight is what has been changing and what looks to change and why we are excited about it. There are 4 points over here. One is digital delivery. I think end-to-end disbursements, sourcing to disbursements is happening paperless and digitally. We'll cover this as we go along. This is making the difference in how we look at inclusive finance. The second is technology in general, whether it's satellite imaging, whether it's geotagging, whether it's the ONDC, OCEN, the India Stack and everything. But these government initiatives are helping to further do this technology integration in terms of how we look at agriculture and microfinance. The third is the government initiatives, what they are doing, because a large part of the integration, the change in the environment is happening because of what policies, what processes the government has put in place, whether it's the government schemes, which we'll cover in our GBD part, and also connecting with various government agencies through APIs. So this is what is making a big difference in microfinance. The reason why inclusive finance, where people thought we're charging usurious rates and all, was not because of any other reason, but the ticket size was low, and hence the cost to income was high. As we bring in digital, the ability to do 10x or 20x with the same infrastructure is coming in, and hence you will see a significant amount of saving coming in. And that is one of the reasons why we are excited about inclusive finance. I personally think that the next decade would be of inclusive finance for the banking industry, and more so for the federal bank, because we are quite excited about this part. So I'll initiate Mohan to start off with the Mark piece.
Thank you, Harsh. First of all, let me thank Venkat for the good words showered upon us, where I think he is actually, I think that bestows higher responsibility on us to deliver the numbers, what he is going to give in future. Again, many thanks to my entire team. Actually, whatever is said about gold, I think, thanks to the entire team led by Anish and the entire branch network. Actually, in every branch in Federal Bank, we are doing gold loan. And so, whatever we have achieved, it's because of the collective teamwork. So that's it. Again, coming back to this Mark business, what we are actually projecting here, I think. So what we have done since we met last during the analyst day, some 2020, so these are numbers, what you are seeing here. We have almost doubled the business. We have doubled the customer base. And I think going forward on higher base, I think we will be able to achieve, again, we will be doubling in next 3 years, and we will be tripling the number of customers. Because I think going forward, we are going to focus more on the microfinance part, because I think where the numbers will be higher. So that's going to be one of the greatest ROA driver for the bank in the coming days. So next time when we meet, when Venkat says he talked more about microfinance, I am sure, 100% sure. This time he talked about gold. Next time he will talk much more about microfinance. So that's the type of business thing emerging in our bank. So again, these are all driven by the digital partnerships, analytics, and the type of business model what we are actually incubating and delivering. So that's it. Again, 90% of the portfolio of Mark consists of PSL. Again, even now it's in double digit. It's yielding double digit yield, and going forward with the more focus on the microfinance, the yield is going up. Definitely is going to go up, and definitely we are going to contribute for the higher ROA. What I think bank is envisaging. So that's it. Next slide. Again, coming to gold, I think there was a lot of things. Gold, as I said, gold is already in our blood. The thing is that I think when in FA, during the COVID, I think we were ready to grab the opportunity, I will say. It's not something we prepared and we delivered during the COVID period, especially in the FA 21. So actually we were ready with the process, products and everything. When there was an opportunity, we grabbed it. We registered higher growth. That has resulted in higher compounded growth rate and all. So going forward, we will be delivering the normal, more than normal delivery and growth. But at the same time, how we are going to deliver it through the platforms where we are building. Apart from the branch delivering the business through the normal organic growth, we are actually created some platforms. For example, Rupeek. And Rupeek is already, we have dispersed 4 lakh loans amounting to 10,000 crores. The portfolio almost touched 2,400 crores. In last June, there was some small thing due to the digital lending directives where we have already overcome all the things. Now it's 100% compliant. Again, the engines will start delivering. Again, microfinance, we have 2 platforms. One is MyFix, which has already delivered 1.6 lakh loans, 620 crores. FedMe, again, it's our own platform, 1.3 lakhs and 530 crores. So these are all actually platforms which are going to deliver, because the only thing what we need to now do is that we need to increase more number of partners. We need to permit the partners to open branches. So it will have multiplying effect on what we are going to plan. It's going to deliver the numbers what we are. Again, we are also learning a lot from the fintechs when you're doing. So we are also building our own things. So from MyVix, we actually created FedMe, then we created Gold at Home. So because the partners are not ready to come to the rural part of the economy and all. So they want to confine themselves to the urban centers and all, where I think using the same technology, we have created our platform, which is going to deliver higher numbers going forward. Again, we have learned something from the MyFix and digital KCC product, which is actually going to revolutionize the way in which we are going to deliver credit at the remote parts of the India, where in this real Bharat story will evolve based on the platform what we have created. Earlier and all, we were never able to approach, all our agri lending was actually focused around 20 kilometers around the branch. Now I think with the platform what we have created, we can go miles away from the branches, we can find partners, and we can deliver, especially the small value loans, which are reasonably high yielding, as well as I think it's going to give us a lot of plus point when we are doing the PSL story, where I think we are net positive on the PSL sale, and again with the type of business what we are going to build with the platform, it's going to deliver much more for us. Again, the run rate you can see, where I think now we are at a run rate of microfinance around 150 crores, gold around 250 crores, and the Agri digital platform 3 crores, which is going to triple like anything in the going forward. I think so. Whatever we are projecting, the platforms are going to deliver with actually onboarding more partners and opening more branches. This is the story though. So what the Federal Bank is actually finding the fortune at the bottom of the pyramid, I will say. Taking the quote from the famous economist Sage Pragla's book. So we are finding, we are 100% sure about the model, what is evolving. We are 100% sure about the numbers, what we are going to deliver. Definitely is going to be ROA accretive for the bank. So one more thing, I think, again, you need to find the embedded value in what we are creating. For example, I think, so through Rupik, I think we have created a 2,000 crore book, means just like an NBFC within our bank, so all new to bank customers, which we can, going forward, we can double it, triple it based on the call we take. Again, microfinance also, if already we have delivered 1,000 crores, already we have delivered. This year, if you see, from 4,400 crores, we will be taking it to 1,500 crores. Again, with the adding more number of partners and more number of branches, again, that's going to deliver more number. And again, if you see the valuation of a MFI, NBFC, and what the value we are creating by doing our own business through the platform what we have developed, so it's going to, so you should, you find value in what we are creating. So again, definitely we are going to deliver. Again, we are having a holistic view of the entire farmer journey. It's like, I think, so we are actually feeding to our ESG targets, and again, we are creating through new products and all. Actually, the thing is that we are actually, again, looking at the very bottom of the pyramid of the where I think we are looking at agricultural labor, the sharecroppers, everything. Then we are creating a platform. We have already created a platform for the digital lending of KCC. Then going forward, I think we will be doing on the electronic warehouse receipts. So entire agri value chain we will be capturing, and we will be doing, creating a business model which will be much more safer, and it will be different from what other banks are doing. So we are actually promising whatever numbers we have committed, we will be delivering. Now I will ask my colleagues who are actually driving the business to elaborate on the first thing. I think Sriraj will elaborate on the microfinance part, and then Anish will elaborate on the gold part. Thank you.
Thank you, Harsh. Thank you, Mr. Mohan. Actually, the belief he has in us is literally obliging. We are more obliged to deliver the same to him. So we'll be doing that. So before we present the actual MFI journey to you all, I would like to invite all your attention to a short video, which is actually depicting how the technological advancement happening inside Federal Bank. Please have a look. Video 2. Thank you for that. So as you have seen, we have come a long way since we met last time. In fact, Federal Bank has grown in all sense, especially in terms of market share. We have around 0.5% of market share right now. And in terms of the geographical presence, and in terms of the business growth, also we have grown a lot more. And strategically, we are following a distributed risk business model, wherein we onboard entities who are capable to do business locally, and we onboard them, and we tied up with them through a BC friend, and the business is moving. And literally, if I tell you, we have more than 400 touch points, or customer service points on the BC front, who literally driving this business for us. That is across 11 states. We can get into the second slide. Yeah, having done all this, so we understand the market is too huge, and there are tremendous opportunities lying, and we actually do not want limit ourselves with a mere presence. Instead, we actually wanted to have a prominent player who is literally looked upon by the peers. So there are tremendous opportunities at the market, which is driven by the product customization what we have and the geographical footprints. As you can see, we are aiming for a larger presence across the country, and the most capital efficient model, which I told you, like having a structured setup at the field, and the digital capabilities what we are bringing in on the MSME and on the other co-lending aspects and all. And there are initiatives. If I say the democratization of lending or Indian lending landscape, like OCN and India Stack, and all are literally adding colors to this journey, and we are quite sure that we can march ahead with all these tractions. And moreover, most importantly, we are very conscious to have proper checks and balances and more controls while we are doing this kind of a business. And this will ensure our portfolio be there in the pristine status always. I think the story doesn't end here. This MFI segment will fuel the ROA growth of the bank, and obviously, it will lead to a higher business growth in the years to come. Thank you.
This FedMe platform actually allows us to do a plug and play with our partners. So what would have taken roughly about 8-9 months to onboard a partner and do technology integration today can be crashed into just about a month or 2 months' time. Plus, it gives us all the reports, and it's end-to-end as a platform for us. So that's what he was trying to drive at. Entire process has been made digital, including documentation. Just to give you an example, earlier we had crashed that number of pages which was documentation was done, legal documentation from about 90 odd to 30 odd. And we realized that when you're doing millions of loan contracts, you cannot be having these many pages crashed further down to a page or two. So what I'm trying to drive at, these are the things which is bringing in efficiencies in terms of cost optimization and the turnaround time. The loan which is mentioned about 72 hours is not because the system is not capable of delivering it in half an hour. The system is capable of doing it, but a MFI loan requires group meetings to be done, orientation to be done, financial literacy to be imparted. And that's what takes us time to doing that part. So all those enabling blocks have been put in place. Go ahead, Anish.
Yeah, thank you, Harsh, and thank you, Sriraj. So Venkat was saying that he loves gold loan, and I can tell you why he loves gold loan. It's like, in the last 3 years, so we have grown by 2.2 times on our portfolio size itself. And you can also see that the fee income part itself, we could improve from 36 BPS to 59 BPS on our average balance. I can also tell you Venkat is going to love us more because we are going to double our portfolio in the next 3 years. So, and for that, we are having different strategies to approach the market. And first is our distribution model. And our distribution model has 6 touch points over there. For the paucity of time, I'll touch on 3 major touch points. One is obviously our branches. We have a great branch network where expertise is built across our branches, and we are expanding our branches by 25% in the next 3 years, and that will also add up to the story of doubling our gold loan portfolio. So as Mohan has rightly mentioned, we have great fintech partnerships. We are already working with a couple of them, and these partnerships have contributed significantly to our growth story. And you will be seeing we are expanding to more partners and more geographies in the next 2-3 years, and this will also add up to the story. And the new area where we are foraying into is co-lending. We are already in discussion with many NBFC partners, and we will be partnering with the selected NBFC partners and the customers who are reaching on the NBFC side. We will be lending 80% of the book over there. So that will be another area where you will be seeing us foraying into. And I would like to draw your attention to a platform which is called Fed Gold at Home, which is a complete digital lending guidelines compliant platform, which will be enabling us a plug and play for all new upcoming partners in fintech world. So many partners will be coming and they will be just logging into this system, or we are getting integrated to this system. This is a complete digital platform where customer onboarding, customer loan appraisal and dispersal happens on a digital model. So that platform will be, is ready and it is running for one of our partner. And we are also looking into new customer segments, like till now we were looking for customers who are already gold loan customer or ready to avail a gold loan. But there are set of customers just like you may be having gold at your houses, but may not be, never tried for a gold loan. So we are building new kind of products for such customers also, which maybe one time we will be seeing as customer coming and dropping their gold in some of the machine, a gold teller machine, and instantly the fund getting credited to his account, you will be seeing in future. And there may be credit cards offered against gold also. And with all these things, we will be doubling our portfolio in the next 3 years. And in this journey, we will be by surpassing a milestone of becoming the largest private sector bank in case of gold loans. So I'll also take you through the agriculture segment also, where how we are reimagining our agriculture lending process and how digital is helping us. So recently we got a chance to work with Reserve Bank's Innovation Hub, where we associated with the team and we built a platform which enables a farmer to be onboarded and process his loan using the data available across the public domains, and then disperse the loan within 5 minutes. All this process happened within 5 minutes, and this has been launched by Honorable Reserve Governor himself. So we see that this as a very powerful tool and powerful platform, where we see that with the more tie-ups coming over there, we will be partnering with, say, sugar companies, tea estates, and we will be associating with the milk credit societies and all. Which, with these kind of strategic tie-ups, we will be expanding to more farmers, and this will also ensure that there is collection is ensured over there. So with these initiatives, we see ourselves reaching up to 2 lakh customers and building an AUM of 2,000 crores in the next 5 years. We are also, I would like to touch upon a couple of other initiatives we do on agriculture sector. This is on the electronic negotiable warehouse receipt funding, which is a new area which we are keenly exploring and we have started doing. And the other one would be, we are already forayed into Agri infrastructure funding also. So with this one, I will take you to one video where how we launched our instant KCC, which I was talking about, how the governor has launched and what it is. Please.
Pilot project based on this innovation has been launched in Madhya Pradesh and Tamil Nadu in partnership with the Union Bank and the Federal Bank respectively. For both new KYC loans, that is fresh KCC loans, for the new Kisan credit card based loans, as well as for renewal of such.
பெடரல் பேங்க் போயிருந்தோம். அங்கே போய் நம்ம மேனேஜர் மட்டும் லோன் கேட்டேன், தரம்னு சொல்லியிருந்தாங்க. அவங்களும் மறுநாள் காலையில் தோட்டத்துக்கு வந்துட்டாங்க. தோட்டத்துக்கு வந்து கைரேகையும் ஆதார் கார்டு ஜெராக்ஸும் வாங்கிட்டு எனக்கு உடனே ஒரு 2 நிமிஷத்தில் எனக்கு லோன் வந்து சாங்ஷன் பண்ணி கொடுத்துட்டாங்க.
So from the gold and the glitter to business banking, over to you, Ratesh.
Thanks, Harsh. Thank you, Hanish. Business banking, just an introduction, is at 14,200 plus SME lending book, where we have more than 80% of coming under the PSL, mostly the micro and small under the MSME, with an average limit size of 75 lakh and nearly more than 29,000 customers. That is a broad introduction of business banking. Since last we met in 2020 February, we had a tough time. 2 years we were down with COVID, and also maybe another year where it took some time for the revival for the MSME. During that period also, we could register a growth of 13% CAGR, even though we were very cautious, very limited in acquiring NTB customers. But at the same time, we were extending support to our existing customers by way of GECL, by way of additional loans for their genuine requirements, handholding them. And then, at the same time, we were building the ecosystem for creating a launch pad after the COVID is over, by way of introducing more distribution, by way of more digitalization, by way of introducing and usage of data and analytics, and also building partnership. That is what we were doing in the last 3 years with a 13% CAGR, but we are ready to grow and double the business in another 3 years by 2026. That is what we are looking at. The key focus area where we are looking at is on the distribution, which predominantly was the branch banking. I was relying on NKV's team for the business loans, but diversified to other sourcing channels like the RM structure, starting with a hybrid model and then independent model. And we are trying to grow double the pace where India grows. The selection, the next slide, maybe I will be touching on what are the geographies where we are prominent and where we are looking forward to grow. The cross-selling of the customers, maybe in the last slide I'll be able to see it, show you what is other income, how it is profitable. The concept of digital at 4 and human at core is embedded in the system, wherein we are packaging new products, new processes, make the life easy for the customer and for the delivery channels, so that the customer rishta is improved. Next. See, this is the area, geography which I was mentioning earlier. The blue portion shows that we are prominent. If you look at the CAGR growth in the last 3 years, it is more than industry, or double or triple to the industries, not less than 25% in these areas. Now we are ready to focus on other geographies, which is shown as yellow, where we have presence. We'll align our growth to the branch network footprint expansion, plus some of the RM wherein we want to have presence through RMs and then cater to the customers for the MSME. On right side, you can see how we have grown against industry in the last 3 years. Now, we always believe in partnership. You must have heard Jidesh talking about fintech partnership and some of the fintech partners talking here. We also believe in partnership, wherein we leverage that to convert that into business. Some of the examples here I want to mention is the Rubberboard platform, where we are a partner for the Rubberboard in their marketplace for their banking needs. And another one is the DGV Amul, where we have partnered with, and for their banking needs, we are one of the partners, and we are the partner. And back home, we have partnered with Kerala government for the bill discount scheme for the contractors, and also for the NRE returned SME business startups. Recently we have tied up with Tamil Nadu government startup mission for their requirements also, which is just in the nascent stage. So overall, what we want to do is to keep the rishta very lively, knowing what the customer need and act accordingly, design products for the geography, for the segment and offer him. And maybe what has happened in the previous is it is business banking is an entry point for business loans, and slowly they mature enough and slowly move to Kapil's team where he is coming next on the commercial banking. So throughout the life cycle of the customer, we are there and then handed over to for a specialized relationship management. Now, I would say business banking is a revenue multiplier or a margin enhancer. I don't know why Venkat must have missed me in adding in his love. But if he has not thought about that, I am sure he will think about that from this year onwards. Thanks for that. See, the basic principles which we follow, we are very careful in selecting the customers, very, very careful. We have a very robust and excellent underwriting process by which the risk mitigants are addressed. We have a strong geography-wise, segment-wise, ticket size-wise monitoring mechanism wherein the complete life cycle of the loans are monitored and EWS is tracked then and there, have discussion with the customers either by the branches or by the RMs or at other stakeholders. And then we have an excellent collection mechanism built into the system, which all translate into the declining credit cost, which is shown here, which is one of the lowest. And as I mentioned earlier, the other income is one of the best in against the average asset, more than 1%, 1.09%. So certainly, this business we are excited to grow more since the pandemic is over. As I said, we will be doubling it in 3 years. Thank you.
I'll first introduce the team over here. I have Kapil on my right, who heads the commercial banking. Anup on my left, who heads government business. Kumkum on the left, who drives the supply chain business, and Ankur, Shekhar, who does the commercial banking, commercial vehicles. Ankur heads the business solution in the digital space for the wholesale banking space. The next slide, please. Who has it? Yes, next one. You can move it. Yeah. So I'll just give the wholesale banking landscape a little bit about the past. When we started verticalizing our businesses, the first vertical to be formed was corporate and institutional banking, followed by commercial. Government business was started subsequently, and I think it has a restart, which we'll cover a little later. These are three broad business verticals, and then we have the strong product teams on the trade side. Transaction banking, which covers collections, payment, the digital piece of it, and treasury, as you all know, on product sales and advisory. So it's a strong RM-driven team, which is there at the forefront. One thing which people don't notice and don't realize is the back end which supports it. When we started verticalizing our front end, we realized that unless we verticalize or give specialized service with faster turnaround times and focused services, we wouldn't have it. So we have 14 corporate client servicing centers and trade hubs across the country, which cater exclusively to the wholesale clients. In certain areas where we still haven't had a number of clients, we go with nodal branches where all the businesses of the corporates are housed in one branch till it moves into CCSE. What we don't realize is the kind of quality of service it brings in, the TATs it brings in, and which is what translates into what income and float and interest income which we yield, which will come in the next slide. Just two quick points over here. One, the CB-CIB share was at 20%, has inched up to 21%. We had guided that we will move more towards commercial banking with the mid-market and the MSME space. We had inched up to 22.5%, 23%, but there was a sharp growth in the corporate banking business. So while we would want to go commercial banking business, I would like to also highlight that any opportunity available in wholesale, whether it's commercial or corporate, we wouldn't let go of that part. The business mix in corporate is extremely granular, as you can see. Before I get into the next slide, I would just like to highlight the 5 things which has happened which doesn't get noticed to the outside world. We created an organogram, training of the RMs, and the full infrastructure for the respective business teams in the last 6 years. And the training and the orientation has brought in RMs at par and understanding and nuances of the respective vertical. This on the people side. On the product side, we have every single product a corporate can talk about. Shalini spoke about structured products and esoteric ones, so there's nothing esoteric about it. We have every single one from factoring to DAs to PTC transactions, cross-border. We have every single product a corporate can ask or want for. Third is on the platform, which is what Ankur will cover. We created FediBiz. It took us about 2 years' time, and we are still redefining it and refining it further to cover trade, transaction banking, supply chain, and the normal banking services. Fourth one was policies and processes. A large part of our credit processes have been streamlined in the last 4-5 years. Policies have been realigned because of the new products we have bought in. Last, but the most important one is on the analytics piece. The MIS and the analytics which we have at this point in time, we have client-wise, product-wise information available at the fingertips for every single RM. Not just does it give us insights where the money comes from, we also know which unprofitable businesses which you would want to weed out. And this has played a significant role in terms of profitability for the businesses. The next slide. This is something which I would like Kapil to cover, which is the various benchmarks, which is what the result of these efforts have been.
Yeah, hi, good afternoon. Thanks, Harsh. I think this would be easier to cover. As Harsh has already explained that we have built up this entire ecosystem, the distribution system which is there. This is precisely what is being shown here, the benefits which we have accrued from March 19 to December 22. You can see for yourself the type of growth which we have seen in asset. During COVID period, obviously, in fact, we have consciously, in fact, slowed it down because we were just testing the market. But now see, in fact, the growth which is happening. This year, we are talking about 24% growth. Annualized, what we have mentioned here. Apart from that, what is more important is that we are moving from wallet share to mind share now. And this is precisely what we have developed the RM model for. If you see in the self-funding ratio, this is a very, very important parameter that we look at internally, that if I'm funding a client, how much of liability business we are getting from them. And mind you, this doesn't include salary accounts, where we have grown significantly, that is being kept outside it. This only include current account balances, credit balances in OD account, as well as term deposit, which we have from our wholesale banking client, be it corporate banking client or commercial banking client. So which has gone up from 16 to 26%. Another piece which is very important is the fee to average asset. I think when we go, it's always easy to lend. There's nothing rocket science in it. You can always go and lend. But more important thing is that, are you getting into other piece of business? Are you really getting into transaction banking? Are you really getting into FX, treasury? Are you getting into trade? So this is precisely what we have done during last 3 years. We have got into almost every gamut of business with them by offering them structured product, by offering them advisory. Probably I'll come back to advisory in the next slide itself, where I'll brief you what exactly we have done. Another thing, you have noticed that the book is pristine. In fact, the GNPA ratio has come down significantly for us. There is a growth which is happening. We are getting into mind share. We are getting more wallet from them. And more importantly, even we are able to maintain the book quality. This is precisely what I want to brief you here. Probably we can move to the next slide. So this slide, I'll probably in fact cover in few things. Product, obviously, Kumkum will talk about supply chain. Ankur will talk about digital. I'm sure Anup will talk about government business, CBDT, custom, etc. More important thing is that we have now become an advisor to our client. I think this is something which is very, very important. So we have a center of excellence, and this center of excellence guide them on trade matters, guide them on regulatory matters, be it ODI, be it FDI, be it bias credit, be it any, in fact, credit in foreign currency. And then we have an IBU, which can help us in ECBs as well as many foreign currency loan. I'm sure Treasury would be covering it. On the cross-sell piece of it, I'm sure many of you would be aware that Sham, every, in fact, Sunday morning, he writes to the entire bank. So he shares with them his experience as well as what exactly is happening in industry in the bank. In one particular post, he mentioned about Bal Gunak. I don't know how many of you know about Bal Gunak. It means force multiplier. So this is precisely what we are looking at in cross-sell. cross-sell, the entire bank is working as a team. When I'm onboarding a wholesale banking client, I'm ensuring that they are connecting with my branch team so that they can go and sell the salary, they can go and sell the insurance product, they can go and sell the wealth product. And more important thing is that we get the promoter accounts, their family accounts, every ecosystem is captured. This is what we are looking at. Touchwood, we have been able to do this, specifically in the commercial banking piece of it. In corporate banking, it's a little bit difficult. All of us understand that, but we are getting into it. I would not pay much attention to digital because I'm sure Ankur would be completely covering it. On the analytics piece of it, I would only cover two things. One is we are using it for business development, and second, the most important thing, for underwriting as well as, in fact, monitoring. Both the things are done simultaneously. See, we do this GST analysis. From that, we can get all the vendors to whom they are making payment. Then we get into deeply into those vendors. Can we tap those vendors also? Can they also become my client? Similar thing is happening, in fact, in piece of underwriting process, because we have now GST analyzer is there, bank statement analyzer is there, and their financial statement analyzing is there. So we can see, we can corroborate whether whatever they are stating in their, in fact, balance sheet, same is getting reflected in GST returns or not. Same is getting reflected in bank statement or not. All these things are getting done at the back end, which is helping us, in fact, in building a better book, and which we have just shown in the previous slide. So thanks from my side. Harsh, back to you.
Some of the initiatives which you're already talking about, supply chain is a very core and a focus area. We're looking at lending to the entire ecosystem surrounding the anchor OEM. It gives you a yield uptick with a better asset quality and significant PSL benefits, which we'll cover a little bit more in detail. Second is the capital market piece. The capital market piece is a significant fee earner and on self-funding. And I think with a lot of regulatory changes, controls being bought by exchanges and technology being bought in by banks, this is an extremely secure business which we have been growing. We have been there in the debt capital markets. We are looking at the equity piece and eventually the commodities piece over here. The third area which we have already started working on is on the fintech and the startup space. Just a few things we saw as the tie-up with the Kerala government. We've tied up with the Tamil Nadu startup mission. And we're looking at this system in terms of lending in a very ring-fenced manner to select startups and fintechs. The yields are higher, the liability piece is good, and the fee is significant. And this is one piece which is growing at a tremendous pace. So we have a specialized focus on that part. These three we have already initiated. Some of the initiatives which we are looking at in this current year and the years forward is on the digital lending and the co-lending piece. You see digital lending largely in the retail piece or what we heard about on the inclusive finance. We are trying to see what we can do. Over here, we'll start and focus on the MSME space and the mid-market space and see how we can do to cut short the turnaround times in terms of lending space. Co-lending and partnerships will help us in terms of reaching out in terms of deeper geographies, lower cost of sourcing, and a wider base to focus on. Sectorally, this is another area which we are looking at in terms of developing skill sets on certain sectors, healthcare, real estate, educational institutions, where both in the business teams and the underwriting teams, we'll have specialized teams which understand the nuances of it. These are the three major areas we're looking at. Correspondent banking and MNC vertical is a piece of businesses which we have in our mind, maybe not immediately, but we're looking at focusing on that in the years to come by. So this is what it is. We'll go. Another piece which is there, which we have, is on the priority sector book and the ESG journey. The ESG journey which we started, we have built up a book about 2,700 crores, and we have a huge pipeline and plan to build it to a 2 billion book in a matter of a year and a half, 18 months to 24 months. So that's something which we have also been embarking on because we genuinely believe in that journey as well. The next one is on supply chain, followed by digital initiatives.
Thank you, Harsh. We see supply chain finance as a huge opportunity and focus area for the bank. We have gamut of products under supply chain finance. We have grown significantly over last 2 years. However, consciously during COVID period, we reduced our book and we developed our SCF capabilities. How we grew so significantly over last 2 years is because we have a robust digital solution which is capable of end-to-end integration. We have portal access for our customers, also Dropbox mechanism for straight through transaction processing. Also, we targeted the ecosystem of entire corporate. So I'll give you an example that we funded a large auto OEM ecosystem. We funded their purchases and their sales side. Their purchases side, we funded their vendors. Then we funded their sub-vendors also. We funded through trades as well. This is how we covered the entire value chain. And for their sales, we funded their dealers. We did a receivable financing also. And also we covered their end user. That's how we funded the entire ecosystem for the corporate. So as per World SCF report, SCF is gaining momentum across the world, and it is said that the SCF market in India is 18 lakh crores. However, it is estimated 70 to 75% is still not served because there are lack of data, lack of clarity on the transaction documents, high cost on onboarding, smaller ticket size of the loan. So to support or to bridge that credit gap, there are certain initiatives undertaken by government and regulators like TREDS, ITFS, Account Aggregator, ONDC, OKIN, e-invoicing and GSTN. Why we as a bank see supply chain finance as a value? Because we feel that there is a yield uptick, significant yield uptick. It contributes toward PSL book. It works as an entry strategy in the larger corporate and creates a stickiness with those larger corporates. It works as a feeder to retail team for passenger vehicle, commercial vehicle, etc. The book is granular and the asset quality is pristine. Why it is so? Because we derive a soft comfort from the corporates. Like in the vendor side, we get accepted invoices, debit mandates, etc. On a dealer side, we get stop supply comfort. We have a MOU signed up with those corporates wherein they give recommendation for those dealers and they tell us that how the dealer is performing with them over years. So with all this, we strive to achieve 10K number in next 2 years. Though I have just verbalized it unconsciously and I'm sure my bosses here are going to increase my targets. But thank you so much.
Yeah, so I think Kapil just mentioned about self-funding ratio. Yeah, Kapil just mentioned about self-funding ratio and how we are making cross-sell happen in not just lending. So the relationship is multifold. It's not just the lending that we are doing with our corporate or wholesale clients. So how we have achieved that? Over last 3 years, we have put in place various building blocks to become one of the best digital transaction bank in the country. Today, our API stack is so powerful and in fact is kind of enabling transaction processing for some of the large NBFCs and fintechs in the country. And you have seen the success stories on the retail side, on the corporate side also. We have a lot of, we have had corporate integrations which is enabling digital transaction growth. In fact, as you can see over here, our digital migration has increased significantly from 72% to 88% in just 1 year. We are processing close to 20,000 crores worth of transactions through API channel alone in a financial year. Yeah, that's the kind of volume we are currently processing. So all this is helping us building our granular car book and increasing our self-funding ratio. On the receivables front, we have best-in-class solutions for managing receivables, for catering to receivables requirement of any segment of the industry, be it a education institution or a NBFC or any insurance company. We have the solution for them. On the on the capital market side, we have end-to-end digital escrow. In fact, we are one of the very few banks in the country today who is offering end-to-end digital escrow solution, not just escrow account opening, but also the escrow transaction processing also being managed completely digitally in a paperless manner. On the trade and supply chain front, we are in the process of revamping our entire trade solution, which is going to be an AI-driven and AI and ML enabled solution. which will help, not just help us improve the customer experience, but also reduce our costs and transaction processing debt significantly. So with all this, I think we are on a part to become one of the best transaction bank in the country. We have the very granular car book because of all these solutions. I think over to.
So this covers the commercial and the corporate banking piece. Government business had a reincarnation in 2021 when the government of India lifted the embargo on private sector banks to do government business. And I think that gave us huge amount of opportunities. Anup is heading with a set of team, the government business, and he will run you through this presentation.
Thanks, Harsh, and good afternoon, hi to all. So, why are we so passionate about this business is rightfully encapsulated in the slide presented here. Everyone sitting here about 6 months back, while making payment of taxes, would have known how difficult it was. Maybe you would have to take a day's leave even to make tax payment. But that's not the case right now. I would say Federal Bank, our bank created history by becoming the first bank, yes, the first bank in India to offer tax payment through payment gateway. You can make now payment of tax using credit card, debit card, or even UPI handles, and even the internet banking of other banks. So that's why we are so excited about our journey in government business. Building on the excellent tech powerness we have, we are going to build our business going forward in government business. As you can see, the live projects on the right of the screen, wherein we have in last 6 months been live in all those projects. And this will help us to build on the CASA and business going forward. To take one, you can see the customs, wherein we were integrated almost 4 or 5 months back, but government came up with another module for customs, an upgraded version, and we became again the first bank to complete all the testings in that customs portal too. And even in PFMS Model 1, which is the most advanced version in PFMS, there are only 4 private sector banks empaneled in Model 1, and Federal Bank is one among them. So with this, we are going to concentrate definitely on the central as well as state government business. And more than that, we are going to focus on institutional as well as task account. By task, I mean to say trust, association, society, as well as cooperatives. We are all RMs in the structure, right from myself to all the business people sitting there. All are RMs going to concentrate exclusively on the CASA business. And you can see the way the business is progressing even in this financial year due to, even though the live projects have been done only 2 or 3 months before, we are getting very good traction, and the business has grown by almost more than 60% this financial year itself. So the tremendous scope of this business stems from the fact that the quantum and the captive market that we have in front of us. You can see in this picture, almost in all the sectors we are live, except barring CNA and Bharat Kosh, wherein we are in the last stages. So this is the captive market that we have, and we are going to focus fully on this in going forward. And our aim is to target a minimum of 3% market share by 2025 in this sector. And this will add to our fee income, our CASA float, our customer retention. All this will be taken care of by concentrating exclusively on this. So as you can see, business and data are not restricted to selected few. It is open right now. The competent lot can take over the business. So you can see what are all the major government schemes that are available, wherein we are going to focus to bring the CASA business for us as a bank. And here, the best thing is that we are live in this platform, so we can, and the number of banks maybe in competition will definitely be lesser. So the chances for us to get business is also more. So we are going to improve the CASA based on the schemes that are going to be live. And on the right side, you can see what are all the schemes that we are going to concentrate right now. And just to give the way we are, how fast we are in doing the business, take the case of NLP Marine, which was launched on 27 Jan by our Honorable Cabinet Minister of Ports. And we are there right now going to execute NDA agreement with NLP Marine, Indian Port Association. So that's the pace in which we are moving, and we are hopeful of doing good business going forward. And our target is nothing less than 2 times business in next 2 years. Thank you.
We're looking at GBD significantly for institutional liability piece. That's one part which we're focusing on. Apart from that, we have 1.4 crore customer base and large corporate base. Not only will it provide them extra services, but float on the customer end and a significant amount of stickiness. Some of the things on PPF and Sukanya Samriddhi and other things, it ties the relationship for decades, for years together, because it creates that kind of stickiness. So it's one which is creating us institutional liabilities, and secondly, hooks for a sticky relationship. Now we shift gears to the high margin business. The last one, but not least in love, the commercial vehicle and construction equipment. This is one business which we started about 4 years back, of which 2 years were COVID impacted. And we had consciously slowed down the business because commercial vehicle business was probably one of the most impacted segment, because cargo movement itself had come to almost a grinding halt. We have restarted that with vengeance. We have launched, we were in 2 regions, we have expanded it, we've gone out with products which I think Shekhar will cover. He's a veteran in this industry, and I'll request him to cover this piece.
Good afternoon, everybody. And thanks, Venkat, for remembering me, though you missed one of the earlier speakers. And thank you, Harsh, also for mentioning CVC as a high margin business. Anyway, thank you very much. So it is said that the CV industry is an economic barometer of a country, in the sense that if the economy moves up, the CV industry is the one which gets benefited first. And on the reverse, if the economy is going down, it is the first industry that is hit, that gets the hit. Thankfully, for the last 2 years, the CVC industry is doing well, and from a low of 5.67 units in FY21, it grew to 7.11 units, a growth of 26%. And from 7.11 units in FY22, it is estimated that it will grow up to 9.4 lakh units in FY23. And also the CV finance industry, I think we have a potential of 75,000 crores of disbursal at any point in time. And the overall industry with the AUM of 4.4 trillion is expected to go up to 5 trillion in this financial year. Now, there are reasons why we are so upbeat of the CV industry as well as the CV finance industry. One is the huge government spending. So as you are aware that 10 trillion is the budget allocation for infrastructure. Second, and the huge amount of investments are going to be there on roads, constructions and mining. Second, there is a huge pent-up demand of replacement vehicles. The sales during the COVID period were not that high, and the pent-up demand is now getting satisfied. Third, the government has announced a scrappage policy wherein vehicles which are more than 15 years old, they will have to be scrapped. It is estimated that more than 10 lakh vehicles which are more than 15 years old apply in this country. Whether all of them will get replaced, it's a difficult question to answer, but it indicates the huge amount of market potential that exists. Again, of the 80% of the vehicle, 80% or more of the vehicles which are sold, commercial vehicles which are sold, get financed. And secondly, the division between organized finance and unorganized finance is also quite wide. Not more than 60% of the vehicles which are financed come through the banking or the NBFC channel. The AUM is growing around 14%, as I said earlier, but on a very small base, we have been able to grow our AUM at the rate of 60%. So it's not a very significant number, but at least it's given an indication that we are on the right track. Next. So this gives an indication of the performance that we have had in the last 2 to 3 years. In FY22, we grew by 40%, and in FY23, we anticipate that we will grow by 60% on an annualized basis. So this is the principal outstanding we are talking about. On the disbursal side, we grew by 45% in FY22, and this year we hope that we will be growing by 85% on an annualized basis. But if the numbers in the first 2 months of the Q4 are any indication, I think we will be able to double the disbursal this year itself. And while we were building this book, we have taken a lot of cautions to ensure that the ticket size is granular, in the sense our average ticket size is less than 25 lakhs per asset. It's around 22, 23 lakhs to be exact. Second, we have ensured that we have an eclectic mix of new customers and existing to bank customers. That ratio is around 60 to 40. Third, 80% of our books is under PSL. So that gives us a huge opportunity for us to support the entrepreneurs and of course offer them better rates. Fourth, in order to ensure that we are not skewed towards any one manufacturer or any one product, we have ensured that we have tie-ups with MOUs and preferred financer tie-ups with all the original equipment manufacturers and construction equipment companies, so that there is no skewness in our portfolio. Yeah. Now, I would just like to explain the approach that we have taken in building up this portfolio. First of all, we have ensured that we have an all-India presence, in the sense that we were operating only in the south and the west till October 22. Beginning October 22, we have also started operations in the north and the east. So now we have an all-India presence as of now. Second, we have ensured that we have a dedicated CVCE vertical. Within the bank, we have recruited people who are experienced in the CVCE finance industry, in sales, in credit, in collection and risk. In all the parameters, we have taken people who are experienced in this business. Third, we have ensured and we are trying to leverage the branch banking network that we have. We have more than 1,300 branches, and we have been able to activate 689 branches as of now. I think we will be able to cover 85% of the branches in the next 2 years. Fourth, we have issued products covering all the aspects of CVCE finance, whether it is used vehicle, whether it is used construction equipment, whether it is balance transfer, or whether it is trade advance. So we have the entire range of products, and we are sure that we will be able to give all the offerings that are possible in the CVCE construction space. Besides that, we have also done routine things like leveraging on a supply chain finance, appointing brokers, DSAs and DDSAs. All those routine things also we have done. The last thing we have now initiated, the initiative that he has taken, is digitizing the entire process, right from sourcing till dispersal. We are trying that it be a very seamless and paperless exercise. So we are very, very upbeat about the commercial vehicle CV finance industry. We have an experienced team, and as we are hoping to double the book this year, I think we will be able to double the book in the next 2 years also. And we also hope that we will have IRRs in double digits. Thank you. Thank you very much.
Thank you. This completes the wholesale banking piece, and including common business and commercial vehicles.